Thank you for joining us this Friday, the 29th of April. I'm Sophia, a market analyst with Bell Direct. Well, this week, key inflation data was released. The inflation rate came in at 5.1%, the fastest annual rate in 21 years. So what does this mean and how does it impact the stock market? We know inflation is the rate prices of goods and services increase over time. And when inflation goes up, purchasing power goes down. This is where interest rates come in. The interest rate is the amount you're charged to borrow money, and the RBA adjusts the interest rates to control inflation. The RBA will increase interest rates to decrease the demand for money and reduce the amount of money that's circulating in the economy. So in recent years, while the cash rate has been at its record low of 0.1%, it was easy to borrow money, which led to more spending. This stimulated the economy, however, inflation is now outside of the RBA's target range. The RBA will meet on Tuesday, and it's expected the central bank will increase the cash rate by 15 basis points. Let's step back and consider what happens when rates rise. When the RBA raises interest rates, the prime rate also rises. This is the rate creditworthy customers borrow from banks. Now, this raises credit card and mortgage rates, and consumers end up paying more and have less disposable income. Companies that are dependent on consumers purchasing their products and services will see a drop in profits as households are more reserved on their spending. Meanwhile, businesses that depend on borrowing money from banks to expand their business will find it's more costly to borrow money, so they may cut back on expansion plans, which slows growth. When these factors reduce the net income of a company, the stock price usually drops. Now, when inflation rises as a result of an increase in commodity prices, stick with stocks like materials and energy, which tend to benefit. While modestly rising inflation is positive for the broad share market because it's consistent with sustainable economic growth, high inflation above the RBA's target of 2 to 3%, like we're seeing now, can be negative. However, the severity can vary from different sectors and investing styles. There are some stocks that can outperform in inflationary environments. For example, gold is regarded as a safe haven. It has maintained value over time and acts as a hedge against economic downturns. Other commodities to consider are silver, copper, sugar, corn, and livestock, which can be negatively correlated with stocks and bonds. Also consider defensive stocks. So these are stocks that provide stable earnings and consistent dividends regardless of what's happening in the share market. These include healthcare, biotech, utilities, and consumer good companies because there is more consistent demand for their product regardless of inflation. Now let's see how the market has reacted this week. It has been a rough week with the Australian share market falling 1.6% Monday to Thursday. 10 of the 11 industry sectors are trading in the red, with tech shares taking the biggest hit while utilities are slightly in the green. The best performing stock on the ASX 200 was Chic Collective, CCX, trading 12.8% higher after updating the market on its strong gains in sales. CCX reported total sales growth of 47% in H2, whilst earnings remained flat year on year. Meanwhile, as the information technology sector fell 3.8%, tech stocks EML Payments, Life360 and Tyro Payments were the worst performers on the ASX 200. EML has declined a massive 44%. The company reduced its FY22 EBITDA guidance by approximately 8% to the range of $52 to $55 million, and that was due to operational execution problems in Europe. The most traded stocks by Bell Direct clients this week were Sophia Resources, Mount Gibson Iron, Bank of Queensland, BHP, News Corp, and Lake Resources. Clients also bought into ANZ and Rio Tinto while took profits from Fortescue Metals and Centire Group. And the most traded ETFs this week were BetaShares Global Quality Leaders, iShares S&P 500, and the Vanguard Australian Shares ETF. End-to-end economic data to look out for next week includes the RBA's interest rate decision on Tuesday. Now, as mentioned earlier, the RBA is expected to lift the cash rate by 15 basis points at its first meeting of the month following the inflation data release this week. On Thursday, balance of trade data will be released, which will highlight Australia's trade surplus for March relative to the difference between Australia's imports and exports. And that's all for this week. I'm Sophia Mavridis with Bell Direct. Have a great day and happy trading.